Good morning, everybody. Welcome to today's 1 Million by 1 Million Strategy Roundtable for Entrepreneurs. 1M1M, as you know, is the first global virtual accelerator in the world. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue, build $1 trillion in global GDP, and 10 million jobs. And in support of this mission, we've been doing these free mentoring roundtables since 2008. And the 1M1M program was introduced in its current format, more or less, at the end of 2010, although we have added a lot of things to the program since then. So this is the 338th free roundtable. We have done an equivalent, actually more than that number of private roundtables, which is for our premium members only over time. So it's been a extensive use of this format of online roundtable-based mentoring and strategy work that we have effectively institutionalized in this program. The event is being recorded, and the reason we record the event is, one, a lot of people get to listen to it after the show and learn from it, but also the people who are pitching and dialoguing in the sessions like to have these as notes. A lot of complex stuff gets discussed, so instead of trying to take notes while you're discussing, it's a lot easier if you have a recording available after the fact. So that's why all recordings are available of every single session in our YouTube channel and also on the blog. If you are following us on Twitter, or if you're live tweeting the show, please use hashtag 1M1M. And you can join us on Twitter at 1M by 1M and at Romana. We publish a lot of interesting content through those channels.
May, can you bring my charger through?
Whoever is talking, could you please not do that, because we are trying to do a show here? And Maureen, could you put people on mute to prevent this? Our YouTube channel is 1M1M Roundtables. And these are the calling numbers, 650. What the hell is going on, Maureen? Can you please put everybody on mute? This is extremely insensitive. You can call in to 650-479-3208. Access code 668-985-718. This is the call-in number, and you would need to follow the instructions on the screen so that you don't do what other people are doing in the call right now. It's streaming noise into the call while other people are talking. So it's very important that you follow these instructions. We're not quite ready for mass call-in quite yet. We will do that, but we will do that later in the program. But in the meantime, the line is available, so we would like you to be sensitive about, not disrupting the session by talking in the middle of this session. So there's only so much we can do to keep the session smooth, and you need to be responsible about your role in keeping it going properly. We're going to start our session today with a conversation with Guy Mucklow, President and Co-founder of PCA Predict. Guy, welcome to this session, and we are very much looking forward to learning about your business. And I met Guy a little while ago and learned about what he has done and how he has done what he has done, and his philosophy of how he has built his business is very consistent with the 1 million by 1 million philosophy of, bootstrapped business building and so forth. So you will learn that in the story, his perspective, as well as how that aligns with our perspective. So let's start, Guy, by telling the audience about your business. What do you do? How do you do what you do?
Hi, Shramana. How are you?
Hello. Nice to see you on the camera.
Nice to see you again, and thank you very much for hosting me this morning or this afternoon UK time. Just by way of background, I started PCA Predict, which is known as or used to be known as Postcode Anywhere, 17 years ago in the UK, really seeing an opportunity to use the internet to improve the delivery of data. So in the UK, we have a kind of a niche software market, which is about validating data at the point of entry. And it's about, I mean, the key benefits really to that kind of technology are about improving the speed at which the data is captured, validating the details from the point of view of confirming shipping details, and it also, within the e-commerce space, it's really an important user experience play in trying to get more people through the conversion process in an e-commerce checkout.
So can you double click down a little bit and maybe do a use case that will make it more visceral for people to understand what you do?
Yeah, so in the UK market, there is very well established a piece of technology which typically or historically has tended to be used in call centers. So we have a very comprehensive address database in the UK, which has got all of the residential and business address records in it. It is owned largely by the Royal Mail, our main postal services provider. And there's a piece of technology which has kind of evolved where if you call a call center, you're typically asked what your postal code or your zip code is. That is captured. It brings down a list of 30 to 40 addresses, one of which is yours, and it allows the operator to capture that those details in typically around 7 keystrokes as opposed to the 70 or 80 of the whole address. So therefore, it's a productivity improvement tool, saving roughly around a minute's worth of typing time, and therefore improving the efficiency of a typical call center operator. The other main business use case really is in e-commerce, where, as I said, it's really the principal driver is to provide better customer experience, to remove a common frustration point in the checkout process.
And what, so, you know, what I find really interesting in what you've done, and folks, those of you in the audience, pay attention to Guy's story, especially from this particular perspective, and I'll tell you why I'm drawing your attention to this. Guy has taken a certain data source in the UK and built a software service, a technology-enabled service on top of that to solve a particular problem. Now, we are in 2017 February, and the world is awash with data. This phenomenon of building services, technology-based services, technology-enabled services on top of various data sources to solve various kinds of problems is a huge opportunity. And so what Guy has done is kind of a blueprint of that model of businesses, and there will be many, many, many businesses built on top of, you know, following this particular model. So Guy, let's switch now to the specific value proposition within the e-commerce checkout process. What is it that this data enables you to do? What is it that you do for your customers? And who are those customers?
Okay, so we have roughly 11,000 customers worldwide, of which, I mean, it's fair to say the majority are in Europe, although we see major opportunities really for our technology in the North American market in particular. So our technology is used by over 40% of the internet retailer top 500 UK e-commerce businesses, and it's used, as I said, largely in one of the most critical areas for the whole checkout process, the very last stage, the point where people are sort of confirming their address details, whether that's a billing address detail or a shipping address detail as the final stage in that purchase process. So I mean, if you look at a typical purchase process in e-commerce, it might last roughly five minutes. If you're asking your customers to put in their billing address details as well as their shipping address details, which might be different, roughly 2 minutes of those 5 minutes, or 40% of the time, is taking up putting address details into a form. That can be really frustrating. So the point of our technology is really to speed people through that process, but also to validate and standardize those address details for our customers. And typical customers, really, from our point of view, are all the major e-commerce businesses around the world. So North American business would include the likes of Walmart and Sears and Toys R Us. And in the UK, we have some of the biggest kind of e-commerce businesses like ASOS, for example.
So it's basically
one thing.
The shop. Just a second. So to summarize, there is a lot of shopping cart abandonment. The longer people stick around in the shopping cart, the longer the risk of shopping cart abandonment. This process, by curtailing the time people are hanging out without paying and just filling out and validating the addresses and shipping address, billing address quickly using your technology, is one of the ways to reduce the percentage of shopping cart abandonment, correct?
Absolutely. It's all about removing friction along that journey. Yeah.
Yeah. And now you say you're also doing it for North American customers. Are you doing it for North American customers operating in the UK, or are you doing it? Do you also have access to North American data?
Yeah. So we license data from all the major postal service providers. So the USPS the US Postal Service would be an organization that we license data from. We white label our service, so we've got to the point, I guess, where our platform provides a very interesting business opportunity for large data owners. So Canada Post, for example, license our platform and provide a white label solution using their own data that they sell under a brand in Canada called Address Complete. So Canada Post would be both a customer and also a business that we license data from. Yeah. Okay.
So you bootstrapped this company to $20 million in revenues. How did you do that?
Well, it's kind of interesting. I think there is so much. I always used to, when I was younger, sort of lie back in the bath, trying to sort of dream up those business ideas. And I never, there's so much opportunity out there, I think, in the market for SMBs. Just in terms of providing a better experience for their customers. I think one of the real advantages that we have as SMBs is actually that we have that proximity to the customers, the attention to detail, and the ability to deliver a level of service actually that quite a lot of the very large enterprises that you come across really have lost sight of. I think there are a couple of things to consider when you're setting up any business, really. There's reinventing the wheel, which is a major requirement, because actually it involves a very significant re-education process to customers. If you're asking people to do things in a completely different way to the way in which they've done things before, then there's a massive cost associated with explaining all of those the new ideas to them, but then also sort of overcoming those trust and concerns and getting their confidence to start to get them to adopt this new way of doing things. The other way is kind of what we did, really, which is to kind of take the wheel and just improve the way in which it turns, really, to look at sort of transforming things. So take an established idea, an established market, and see how you can improve it. But just kind of looking at...
How did you come up with this idea?
Well, we saw a piece of technology that intuitively we just felt there was a much greater market opportunity for. Every time I spoke to someone in a call center, you would get that, you'd get taken through that sort of technology piece where people would, in the UK, ask you for your postcode and then pretty much tell you what your address was. So the technology was pretty prevalent. we saw an opportunity, I guess, really within the e-commerce space to take this, to use the internet to extend the availability of that data. So going back to that transformation piece, Sramana, if I look at the way in which things were being done when we came into the market 17 years ago, the data was being burnt onto hard media like CD-ROMs. Obviously a very expensive process. It was then shipped out to their customers, which obviously involves quite a lot of costs. And then once the data had arrived on that hard media at the other end, you'd be reliant on a database manager uploading that and then, you know, sort of getting the latest data installed, which could, you know, you've got no real control over. What we did, we saw the opportunity of using the internet to provide a much more efficient means for delivering that data, to enable our customers to integrate into it more easily. And we knew that once, obviously, we'd updated it, it would be automatically updated on our customers' databases. So we're delivering more up-to-date data at a significantly lower cost and an ability, I guess, using the internet to enable us to tap into different pricing models. So rather than, you know, because we had total control on how much data was being used, we could provide a sort of a transactional service which would enable us to tap into that very long tail end of the market, which is precisely what we did.
So you understood the data-related technology challenges and you had nifty solutions for that. How did you identify the application of that technology to solve this particular shopping cart abandonment problem or accelerating how fast people can check out of the shopping cart? Where did that insight come from?
Well, I think with you know, any new business, you're constantly sort of testing and exploring different business opportunities, different routes to market, and so on. And you know, I guess in the initial phases, it's really about what is going to give you the most traction. You know, where are you getting the most interest earlier on? And from our point of view, actually, and again, big issue really, I guess, in launching anything else into the market is timing. You know, if you remember 17 years ago, most of our potential customers who are in the B2B space were using dial-up modems. So, you know, 28K or 56K dial-up modems were the norm. And so, you know, if our customers were looking at using them in back office solutions, more often than not, because sort of SaaS-based CRM and all that kind of stuff wasn't prevalent at that time, you know, they'd have to go through this kind of dial-up process. And that obviously, from their point of view, is kind of a major barrier to adoption. The thing about the internet, however, was that all of our customers were already online. They were going through an e-commerce experience, and therefore, you know, they were, as I said, already online. And so to kind of bring our, include our technology in the process meant that they didn't have to go through this sort of dial-up process. It seemed to be a natural channel to market for us. And we kind of really, I guess, kind of poured most of our sort of focus into that particular space now. So as I said earlier, you know, we probably have over 40% of the UK market for this niche piece of technology in e-commerce.
How long did it take you to get a product together so that you could start selling, and how did you, you know, I guess bootstrap that phase of the journey before the revenue started flowing in? Did you put in a lot of your own money?
Yeah, it was a very painful experience, to be honest with you. I've been very fortunate, I suppose. I mean, I sold a property quite well, which kind of freed up a bit of capital to enable me to fund the early growth in the business. I also lucked out, I suppose, in getting a co-founder who had tremendous kind of foresight, really, in building a lot of sort of technology that would enable us to scale at a very early stage in the process. So, but to do it really efficiently, really. His overriding kind of philosophy is kind of loosely described as tin over skin. So there's a piece of technology that will satisfy the needs or enable you to get to where you want to get to, as opposed to having to, take someone to do that task manually, then that will be our preference. And so we kind of grew in the first 5 years with just 5 employees to over 2,000 customers and about $1.5 million worth of revenues. But I mean, I don't want to give you the impression that it was an easy ride, because it took us 4 years to get to profitability. We were roughly $750,000 down before we got to profitability. And at its worst point, I mean, I was probably paying personally out of my own pocket $20,000 a month, which kind of every time I kind of paid the check to keep the business going, I kind of thought, well, there goes another car. To that effect. Yeah.
And what would you say were the key levers of growth? It's been 17 years, and you said the first 5 years were just 5 people, very tight, very kind of scary when you were signing checks from your own money, etc. But you got to $1.5 million in revenue, and you got to profitability. What in the subsequent 12 years, what were the key levers that you were able to press to get the growth that you've got?
Yeah, so I would say one of the main things really is just having I mean, again, it's kind of more of a technology kind of thing, having a very tightly integrated system that enabled us to deliver a self-service proposition. I've always been full of admiration for, businesses in the States in particular, like Slack and Dropbox, that are in the B2B space, and SurveyMonkey and so on, that are in the B2B space that have developed self-service propositions. Because actually selling self-service technology is actually really hard to do. I mean, it might superficially appear quite simple, but you've got to get every single component right. I mean, from the discovery process, you've got to be totally transparent in pricing. The value proposition's got to be really crystal clear, and that partly comes down to the actual, underlying technology. It'd be difficult to do it, I think, with, a pretty feature-rich piece of technology. The integration process has got to be really, really simple. And we focused a lot on that. And then the whole sort of onboarding and billing processes, again, have got to be incredibly slick and built to scale as well. I kind of look back on some of the early development work that my co-founder did, particularly around some of our billing systems. So, and, if I tell you that today we do probably about 25,000 invoices a year for our 11,000 customers. We have one person who works 2 days a week to manage that whole process, because it's mainly automated. And we were doing that kind of 17 years ago. And actually, I kind of pull my co-founder's leg and say, actually, we'd have probably been far better focusing on that self-service billing platform than we'd have made more money doing that than on our core business. In spite of the fact that actually that's been quite successful.
How many people do you have today?
We've got 60, 65 people. So again, not a massive headcount.
Very good. I mean, 5 people to 1.5 million, 60 people to 20 million. These are very efficient, very lean numbers in terms of building a business. I can see the reflection of your heavy-duty automation in the systems, but you're saying that you wish you could do more, a la Slack and SurveyMonkey and so forth.
Yeah, it's interesting, Shramana, because I think, it's kind of a reflection, I guess. I was saying this to someone earlier. I mean, when you've been through a very kind of tough process, as I kind of described earlier, where, you're down, where if the business doesn't work out, then you're massively out of pocket. Because, had the business not got to profitability, had we not been able to, show anything for the $750,000 worth of cash that I put into the business, I'd have had absolutely nothing to show for it. I'd have had nothing to sell. It's not like building a house where, you've got, tangible assets that someone can take off your hands. And the implications in relation to that, I suppose there are a number of things to consider. I mean, one, it actually places a huge amount of strain on your personal life. Luckily, I've got a fairly tolerant wife who's kind of gone with my kind of, the ebbs and flows of the business, and has been really great about that. So it's kind of something worth considering. And I've also had an incredibly tolerant business partner who's been prepared to invest huge amount of his personal time along with me to kind of, get this thing and make this thing happen. And I suppose there are a number of things that sort of come out of that. One, if you can survive that really tough period, you come out of it with an incredibly strong founding team. And both Jamie and I have really, had a kind of a really good understanding of each other's own strengths and weaknesses. And the other thing also that it does is that it really, you need to, I mean, it really kind of, it demonstrates sort of the, conviction in something. I mean, you need to have real belief if you're going to spend, the equivalent of a car every month to keep a business afloat.
Yeah.
But the consequences also.
When you make that work as you have done, I think you're a much more robust and resilient company at the end of the day. You can withstand a lot of market ups and downs, whereas the companies that are very heavily externally funded have kind of loosey-goosey culture and loosey-goosey processes. The likelihood of their getting swept up in some sort of a market downturn and so forth is much higher, because those guys tend to spend a lot of money, and when that money dries up, they don't really know how to function in scarcity time.
I heard I found a story from a VC-led business that had gone from 20 to 60 heads in the business really quickly. The revenues hadn't appeared as quickly as they thought that they would, and then they'd had to kind of, get rid of 40 heads, which is massively disruptive. I mean, we've never obviously had to go through that process. I think, going back to my earlier point, one of the things that, is probably maybe a manifestation of the process that we've gone through. Our focus really has always been on profitability. It's been on the bottom line rather than on the top line, which is probably, is the other way that a VC would look at sort of, a business like ours. And I guess you could argue that we've not scaled as quickly as we might have. We've not got, because actually when you talk about levers to scaling a business, part of that is actually getting in some really good people that have got the right kind of experiences, some great connections that can, bring in other people that they know that are similarly experienced, and, and we've not done that quickly enough. I mean, we've sorted that out recently, but, and it's just getting that level of experience in underneath you. You need a group of people, because, I mean, ultimately, founders tend to get in the way of the generation of employees or management beneath them, I think, typically, and it's just about.
Well, and when you're operating in a cash-strapped environment, your ability to hire expensive people, talented people these days tend to be very expensive because of how the market is. Everybody wants to hire them. You have to compete in that talent war, and that's a very, very complicated process. So yes, that's all very, very limiting. But at the same time, there are, trade-offs. So talk about, you have recently turned down a $100 million acquisition offer. So $20 million in revenue, $100 million acquisition offer. You've been doing this for 17 years. Why did you turn it down?
Well, I think at the time, and it was 12 months ago or thereabouts, we over the course of the time that we've been in business, we've always looked for other opportunities. because I guess one of the things about the kind of technology that we provide, essentially it's B2B, but actually it's really B2B2C. You know, it's our customers that really get the benefit of the technology.
Right.
And our customers, with the exception largely of the setup process, the renewals process, and God forbid if we break, and reliability is really critical for us, but our customers actually don't really see the value that we're providing on a day-to-day basis. So we kind of always looked over the years to try and sort of do something about that. And it's about finding other opportunities that are in related markets that make sense to our existing customers, that would enable us to try and develop more than a skin-deep relationship with those customers. Because actually, interestingly, I guess, you know, when we came to the market with the address validation software, our bread and butter business, you know, it was already pretty well established. We took a product and we improved on it, and I think we kind of took it to where we felt the market really should be. I think increasingly what we're looking to do, particularly with some of our e-commerce customers, is to work more in partnership with some of those key enterprise customers and use them to really sort of help and to shape and define, you know, the direction of our business more than we, used to do in the past, yeah? Because that helps then to kind of strengthen, deepen the relationship with those businesses and make a much stronger business overall.
And do you plan to take any financing? Obviously, you've chosen to stay independent and grow on your own. Is this going to be organic growth the way you've done all these years, or are you now shifting to a different mindset?
I think it's fair to say that we're shifting to a different mindset. So I didn't get as far as telling you the reason why I pulled out of the sale. We developed a predictive analytics business, which is all about doing something with our customers' data. But I think we just kind of felt that it was we were missing an opportunity really to take fuller advantage. Through this product that we were working on, to take fuller advantage of the relationship, which is the reason why we pulled out of the sale. Because the reason for the sale was actually, I guess, kind of one of two strategic questions. Do we take forward this new piece of business and use the profitability of our core business to fund its growth and development, or otherwise do we look to sell that business and use the funds to get this new business off the ground? And I think we felt that actually it made more sense to bring the two businesses closer together than to separate the two, which is the reason why we pulled out of the sale. And actually, ultimately, I'm really enjoying what I do, and I'm kind of not quite ready to take a back seat either. So going
That's
forward,
a perfectly good reason.
Yeah, well, I think so, because look, ultimately, and I'm sure all of your listeners will say exactly the same. It's not just about the money. The money is a reflection, or the value of your business is a kind of a reflection of a more measure of success, I guess, in it. But it gets beyond the point of just the money. It's about enjoyment. It's about growing things and other stuff really that kind of motivates you.
At the end of the day, you have to wake up in the morning and do something that you like to do. And most of us who are kind of DNA-wise, we are entrepreneurs. The thing that we like to do the most when we wake up in the morning is to work on our businesses and build something. And giving that up is not always a pleasant follow-on experience. You can give it up and get $100 million, but then what? And given our life expectancies, there's a very long, life ahead. What do you do at that time? And then I think I've heard many of these, like you, many of my friends who are doing these bootstrap businesses, and some of them have scaled enormously. They're doing $300, $400 million of bootstrap revenues, and they have, They have acquisition offers galore, and they have no desire to sell just because they like what they're doing. And eventually, that is what brought us here, because we enjoy doing what we do. That's what brought us here to begin with.
Yeah, very true.
Okay, Guy, we're going to switch to the mentoring portion, and I believe you're staying for the session, yeah?
Yeah, I'd be delighted to, Shramana.
Wonderful. So, folks, let me set a little bit of expectations here. This is a working session. We're going to be working on your businesses. We're going to be working together to see where we can find levers of growth and help you accelerate. That is the whole point of this format of working together. There is no other agenda. You can feel completely safe. We are on your side. We are not adversaries. We are not criticizing you just for the fun of it. This is basically putting our heads together so that you can move forward. And it is very possible that you might disagree with our feedback today. That's okay. You know, we come with our sets of experiences and our sets of perspectives. You come with yours, and somewhere you're going to need to, you know, consider different types of feedback and decide and make it, you know, decide on your strategy accordingly. The one thing that I think is non-negotiable, and you must remember, is not all businesses can raise money, not all businesses should raise money, and raising money does not guarantee success. This is a fact. This is a non-negotiable fact. So, so please do not be obsessed with this idea that entrepreneurship success equals financing. Entrepreneurship success equals customers, revenues, and profits. Financing is optional. So that is not up for arguments. It's a fact. And then last point before we get started is all of you in the room, not all of you will be pitching today with slides, but we want you to participate. This is a round table, so the more you participate, the more you ask questions, weigh in with your thoughts and comments, the more you're going to learn. It's engagement with which you learn. So with that, let's go to Ashish Kaushik from Noida, India. Go ahead, Ashish. Please unmute your line and tell us what you're working on.
Yes. Hi, all. Hi, Shramana.
Hello.
All panelists, all fellow members. And it was a very encouraging talk by Guy. I really was inspired by his bootstrapping his business to 20 million of revenue. It was great. Absolutely.
Thank you. Great. So, I thought so too. I thought yes. Guy was really cool.
Yes. So, starting with me, I am Ashish Kaushik. I am an MBA grade from India and has around 10 years of business development experience, last 4.5 years as an entrepreneur. And we started our journey with recrop.com almost 3.5 years back. We started as a real estate deal site, but we moved to become a full stack real estate brokerage company. Our value proposition to our customers is online to offline, hassle-free home finding and owning experience.
Okay.
Our vision is to delight our clients by bringing great people, technology, and value to the experience of buying, selling, and owning a home or any property. See, if you and our target customers are online customers, first-time home buyers who are looking to buy or rent homes in micro markets we serve. Let us move to customer problems, then I'll move to solution. See, in India there is huge real estate problems. There is a broker builder nexus. There is dearth of good quality data in India, and more than 96% transactions are online. Online there is a dearth of good quality genuine listings with actual pictures, and there is the big dearth of hyperlocal data, same like in US. And then there is very below par services provided by offline brokers. See, India and real estate is a totally broker driven market. More than 20 lakh brokers operate in India, but their services are, at best, that is pathetic. Pricing is arbitrary, services are bad. So Uh, um, so we are in the mode to make our customers experience a seamless and valuable property transaction through us. We are providing that service. Currently, we are working in more than 5 locations in India and have our sales offices there to complete the transactions offline. We have a competitive team of around 25 people that helps people with choosing the best properties, negotiations, paperwork, and home loan, etc. And we aggregate these properties through our own team and broker channels. So our solution to this digital divide and on-ground broker services, improving these broker services is we provide more modern technology with full service agents to delight our customers. Online, we are providing real views of properties to our customers, so they may see properties like never before and cut down on searching costs. Recently, there was a survey in India. So a customer before taking a house or buying a house generally drives around 400 kilometers to see a lot of properties. That is very highly inefficient method. And then when he goes down, he meets a broker who is below par, who cannot offer him all services under a single stop solution. So the next revolutionary step we took is we are having our own representatives on ground to help people complete the transactions with legal and loan help at a single step. See, a client can see actual properties online, see the data that we provide in our hypermarkets where we operate, and when he goes on ground, he meets a very decent, very professional real estate broker who can help him with legal services, home loan assistance, and verified properties. So our customers get complete real estate solutions with utmost peace of mind and at the same cost, or maybe at a reduced cost, because of we are decreasing the inefficiency in the process. So we get the customers best deal with minimum funds. And if you come to the customer acquisition model, we have a we are having an organic growth because lots of people are searching for good quality listings online and good quality broker services online. So they are our natural customers. They gravitate towards us because of our good data, because of our good listings, and because of our service offerings online. Then digital marketing, we have data of people, we send mails, we send SMSs, we do corporate events, and the final customer acquisition model is our sales alliance. We are having exclusive sales alliances with companies like PNB HFL, which is one of the fifth largest housing finance company, because home loan customers are our natural customers. Anyway, they are going to buy home through anybody. So we are providing them. Then we are working with a lot of online companies also, like a Snapdeal. You must be knowing there is a Snapdeal in India. So we are helping their online customers to do the transaction offline, because there is a dearth of online real estate companies in India. Unlike US, there is a Redfin, and like China, there is Lianzia, Homelink. There is a dearth of big offline companies in India. So we are filling that gap. Next slide. And if you see our customer validation, in the last 3.5 years, we have served almost more than 300 customers profitably, around 0.2 million of revenues in 2015 and 16. Around 1,500 clients are showing interest per month on our web portal organically. Then there is this strategic alliances from where another 1,500 clients are coming in. And now we are in the expansion mode, because we have seen the hyper-local growth due to our good business model and exceptional team.
How long have you been in business, Ashish?
3.5 to 4 years.
Okay. All right.
And my question is, as we are looking to grow fast, it's a question that is not in the mood after Guy's speech. So we want to grow further. We want some shots where we can grow to, let us say, 50, 60 offices. We want marketing expenses. So we are bootstrapped as of now.
Which micro markets are you serving right now? This data that you're presenting here, is based on what markets?
See, we are serving some areas of Bangalore, Hyderabad, and some areas of Delhi NCR. So we had been working with four branches as of now, 3 branches. But in the last 3-4 months, we got into the expansion mode, and we have opened 4-5 new branches that will start working in the next 2-3 months only. They will be operational, fully operational. So
and how many people do you have in the company?
Currently, we are working with 26 people.
26 people. Okay. All right. You know, there are certain standard methods of growing. Money is something that you put in after you figure out how you're going to spend the money. So if you go and pitch this to investors, the question they're going to ask you is stuff like what is the customer acquisition cost? What is the customer lifetime value? How do you scale this rapidly? Because right now you have gone from 0 to $200,000 in revenue in 4 years. Now, if you bring in external investors, venture capital investors, they are looking to grow from 0 to $100 million in 5-6 years. So your current pace of growth is not of interest to them. So the thing that you have to prove and convince them about is that you do understand your business, and you understand the formula of how to accelerate this company such that you can go from $200,000 to $100 million in the next 5-6 years. And that's what we're going to need to work on. So I don't have a silver bullet answer for you, but there's a whole series of things that are part of this process to become what we call fundable. You know, I can introduce you to 35 investors in one afternoon. That's going to do absolutely nothing until you go prepared to these conversations.
Yes.
And in our experience of working with entrepreneurs, it takes quite a lot of work to get all those ducks lined up before you're ready for those 35 introductions.
Yes.
So there is, we understand this process. There's a whole methodology of what you need to do to become fundable, and that's something you can learn using the 1M1M program, and you're going to need to put all those pieces together. And I guess the most important thing in there is the formula of how you go from, we're growing at a pace where you've gone from 0 to $200,000 in 4 years. Now you're going to switch modes and go and tell investors how you go from 200,000 to 100 million in 5 years. That's a very different conversation. Guy, what is your guidance for Ashish?
Yeah, I would agree with you entirely, Sramana. I mean, if you can avoid having to take external funding on board in the early stages, I would suggest you do that. Mainly because, all of your attention really needs to be on growing the business and less on worrying about, keeping a bunch of external investors happy. I mean, I guess in the early stages, I kind of almost thought it was a natural part of the process, something that you had to do. Quite fortunately, I guess that option really was never available to us. We hit the tail end of the dot-com bubble, and no VC was interested in funding us. I guess the nice thing is, once you've kind of proven something, then you have the luxury of having your pick really of the investor community. All of your energies really should be directed at trying to get this to a good state of profitability. You mentioned, Ashish, that you're looking at setting up a number of, I think you called it
branches.
New branches.
Branches, yeah. So these are physical offices are there around India?
Yeah, so
Sorry,
I think the part of the model that Ashish is doing is requires feet on the street. There are pictures. You have to take, walkthroughs, video walkthroughs, and so on and so forth. Plus, show the clients around and help them close the deal. So this is it's not a pure online business. It's an online-offline hybrid business, which actually I like. As a model, I like it, and especially in India, the hybrid businesses do well because labor is cheap, and you can scale with labor, and it's actually a competitive advantage. That part of it I like very much, that you're doing that, but I think there is ultimately this will boil down, Ashish, to the mathematics of the business, and I would like to work with you to really refine the mathematics of the business such that you can go to an investor and tell them that, okay, this is the arithmetic of my business, and this is the logic of my business. If you put in $5 million into this business, I'm going to turn that into $50 million, and this is how I'm going to do it. And there is a way to do that, but it's going to be a lot of work. So be prepared for that.
Yes.
Okay.
Thank you, Sarmana. Yes.
We'll continue with more Q&A after I've had a chance to talk with all of you who have sent in slides. So Ashish, hang on. We can talk more in a little bit. Okay. Anuj Sehgal, you're up next. You're very welcome.
Yeah. Hi, everybody. How are you doing? Thank you so much for the opportunity to present myself.
You're very welcome.
So basically, thank you. My name is Anuj. I am basically produced by my mother but directed by my wife. So basically, we are into comedy. Our objective is to create the happiness around the world, and hence, while socially that is the objective, the business objective is to create a talent and from the country and going outside the country as well, to get the best available talent in comedy, to give them a platform to monetize, distribute, and make them actors. So hence we started. I'll give you a quick brief about myself. I have been working in the corporate sector from last 15 years. I've been basically working in the telecom side of it, with likes of Paytm and with likes of Airtel, Comedy and so I have an understanding of the telco ecosystem, the video ecosystem. It was when 3G and 4G launched in India, so I had the experience of working with the telecom operators very closely to understand video service. So when I was working with the companies, there were a lot of big media companies who were coming up with the OTT service, which is over the top, like Netflix, Amazon. So I worked with the companies where from initially early days helped them to scale it from scratch to with right now they're almost 4 years old companies and they're doing very profitable businesses. So hence there was thought process, had a video experience. Now there are companies like Hotstar, which is a Star Group company, and then there were media houses doing their OTT services, but nobody really had a focus on a comedy as a genre. So I happened to go to one of the stand-up comedy shows and saw it and really enjoy it, and that's where the thought struck: why not to have this excellent content to be given outside the cafe and to the masses? That's where the idea struck in. So hence, last year we started with this venture, working with the stand-up comics. So we approached stand-up comics that we're gonna do an online platform for you. So right now it is an online platform on the application side of it, where we have almost got content boarded from stand-up to viral to a lot of regional content. Being India is a country of regional, so we did a lot of regional content embedded into it. So right now the traction is the online platform. We're one of the largest stand-up comedy platforms in the country, and we're the fastest growing. So almost we clocked a revenue of almost $150,000 USD, and almost a net revenue is almost 43% out of that, and almost 1.25 lakh of app downloads on the Play Store with 20% active users who are coming. and this is all organic. We have not spent a single money to acquire the customer till date. So the traction is
Anuj, how
good.
does this work? Do you
So
have,
basically, there are two.
Go ahead.
So there are two, three models. One is there's a mobile app where people download the app and stream the content. So there, my revenue model is basically advertisement and sponsorship, where I get sponsors to embed in the content. We also power a lot of content while we're producing this original content with the artist. We power a lot of digital properties of telcos, telecom operators, the large OTT players, the handset guys. So everybody today is going on the digital side of it. So we are powering comedy genre for all these guys. So that is my other revenue, how is happening. My third
and
thing
how
is,
what is the revenue model for this kind of white label license revenues with the telcos and the handset OEMs? What is the business model?
So primarily it is a mix of minimum guarantees and revenue share. So so everybody has their advertisement or a subscription plugged in, and whatever customer consumes, we get money basis the usage on our content.
So there is also a subscription that the telcos are charging to subscribe to your content, and then they're splitting that revenue with you, and they're giving you some upfront payments. Okay.
Absolutely. So there is a subscription paid model. I have almost near 1 lakh paid customers on this product. The people are paying for a weekly. It's a very interesting subscription story in India. Low price points, but then it's a massified content. So I charge as low as 5 INR. Yeah, it is happening right now.
How much do people pay to subscribe?
So it is as small as 5 INR a day, or could be 35 INR a week, and almost more than $1 a month kind of a pricing.
That's not bad at all.
Yeah. So that is one thing which we are doing. Yeah, please continue.
So the other question I have is, how do you produce the content? So how many, it sounds like you're working with comedians and artists, and how many of those content producers are on your system?
So right now I have 30 stand-up comedians on my platform. What we are doing now is we are going a step ahead. We are going to now schools and colleges to find out the talent at the raw level, and getting their auditions done and trying to find out and trying to then gradually create a content along with them. So kids is the other genre which we're now getting into and trying to produce a content there. We also work on the formats, very templates. Basically, we acquired one Singapore-based format on Fight Comic, which is 5 comics get together and roast each other. So they are offline shows which happens, and they really become full house, and we're getting that kind of a content on a platform. Hence, the thought process is we'll do a low-cost content creation, and also the templates which are related to which are low cost and a fast, output, fast turnaround times to get that content.
And are
there are people in the
producers on your payroll?
No, they are not on payroll. We are working with them on the revenue share model. So while we make money, we give them money.
Okay, so you make money on a revenue share model to some extent, and they make money on a revenue share model as well. Okay, so you're creating some sort of a pool. Okay. Yeah,
absolutely. So that is how it is right now. We are right now bootstrapped. We are right now kind of doing a decent revenue, operationally profitable. But I see a huge opportunity there. We are also now getting into offline shows, offline events on the stand-up comedy side of it. We already done one event in India, and now we're looking to do more and do a more larger. We did 100 people event in last month, which went pretty successful, and I think we were able to recover monies in first event, I would say. And now we look to move forward and do a much bigger events, offline ticketing basically. The third thing we are attempting to go is to corporates. Now in corporates, there is nothing which exists on the humor side of it. Now, if you see all the big MNCs, they have a budget for employee engagement. And now we're trying to get there and try to position ourselves as a humor brand for them to do regular activities with them. We can get the comics to come and perform in the corporates and make money out of there as a model. So we're trying to do online. We're trying to do the online play. We're trying to do the offline play, because see, with online, I know my customer, where is my customer. I know the offline in comedy shows. I know my customer is coming there. So I need to be there to ensure that he is coming and consuming my content online, offline, both ways. And of course, the corporate is extension. Gradually, we'll see, once we establish this online property more stronger, more bigger, we'll gradually then go to probably e-commerce, the humor side of it.
And when did you start this company?
I started last year.
So in 1 year, you have achieved this degree of validation. This is very good. Very, very good execution, Anuj.
Thank you so much.
Excellent.
Thank you so much. We are a very, very small team. We are 5 people team.
That's perfectly fine. As you just heard, Guy did 1.5 million in revenue with 5 people, and then he's doing 20 million with 60 people. So you don't need huge numbers of people, but you have to figure out the model, and you have to figure out the scaling levers and so forth. So what are your questions?
So my question was, one is that, of course, now we are kind of operationally profitable. We want to scale this up. We wanted to go to investors. Should we continue bootstrapping and for some more time and make more validation, or do you think we are right now in a rightly validation stage for investors to think about us, or they consider us?
So I can't answer that question without looking at your presentation in a format that is consumable by investors.
Okay.
There are lots of things that investors need to consider. If I put my investor hat on, there's stuff that I need to see. Like one of them is I need to see a bottom-up TAM analysis. So you need to turn your, the business plan into a bottom-up TAM model, and we can teach you how to do that. But that is one of the things that I need to look at to see how, what is the scale of a business that can be built here with your, various components of online and offline revenue generation techniques. Then we need to also understand velocity of growth. Like I said to Ashish earlier, the same thing applies to you, is that what kind of velocity of growth can we achieve meaningfully, and what is the path to get from 0 to 100, or, wherever you are right now, let's say 150K dollars in revenue, if you want to move that to $100 million in revenue in 5-6 years, how do we do that? What is the path for that? What are the mechanics of that, and so forth? What is the strategy? So this presentation needs to be turned into an investor pitch. And again, we can help you do that.
I will need your guidance.
Yeah, we're happy to help you with that. We know exactly how to do all of that. So, but so far, I congratulate you on what you've done. You've done a phenomenal job with execution, and I'm thrilled to see that.
Thank you so much. It gives a lot of confidence. Thank you so much for that.
Very good. Guy, do you want to add anything to what we said so far?
No, Shramana, I would share your compliments to Anuj. I think it sounds like he's doing a great job. Sounds like he's very fired up for what he's saying. I mean, the only caution I would say is just if you've got a fairly small team in it, we've often been guilty of it ourselves. It's just it's maintain focus. Sometimes temptation, particularly in the very early days, is just to follow lots of different revenue opportunities. Do one thing and do one thing really well. So, I know that he sees lots of opportunities in 3 different sort of channels at the moment, but if there's one that's working really well for him,
very good
focus
point.
on that.
Very good point. Anuj, what Guy is telling you is something that you should absolutely keep in mind, is that things that you're figuring out, scale those things as opposed to trying to figure out new things all the time. If you have figured out the online portion, scale the online portion to several $1 million worth of revenue before you go tinker around with other things. So those are the kind of things that I would like to look at as we start working together is really figuring out where you should be putting your energy, what are the low-hanging fruits to really get velocity and scale, and figure out figure out the mathematics of it.
I appreciate that. Happy to connect you, after this. Yeah.
Sounds good.
Thank you so much, Guy.
You're very welcome. Okay, Jahir Hussain is the next presenter. Let me fast forward to the slides here. All right, Jahir, from London, actually. You have a fellow Brit here.
Yeah. Hi, Jahir.
Hey
Hello,
guys.
Jahir.
Yeah.
Should I say good morning or good afternoon or it's all right?
You can even say good night because some part of the world it is good night and there are probably people from there. Yes,
okay. I think thank you everyone on the call, and so I will try and give the gist of what I've been doing over the last almost 3 years. 2013 is when the bug started with me, the entrepreneurial bug, I would say. Almost 16, 17 years I've been on the technology forefront. I have delivered systems large scale. I was with Infosys for about 7-8 years, and then a Detroit-based company called Coensis and so on before. So I wanted to kind of consolidate and focus on a particular industry, and I chose education as the industry to focus on. And within the education sector, large-scale publishing companies where there is a lot of gaps on available technologies and solutions to them. So I chose under education publishing as a core space to focus on. We built in 2013 using our own self-funding and friends and family. We invested in building technologies for the publishing industry. And in 2013, as you rightly said, not to do for Anuj, I ended up going everywhere, every continent, every geography to kind of see that we have built this technology. This is going to do wonders. And not a single conference I missed in 2013, right from US, Europe, UK, and to an extent the Middle East also. But at the end of 2013, we have kind of spent a lot of marketing and branding monies, but not a single customer took our products. And 2014 is when we started building traction, publishing technologies, and we were focusing on selling technologies to the publishers, and then one step ahead and got content from the publishers. So basically, we were giving our software on the SaaS model to the likes of Bloomsbury's in the UK, Pearson, and various international publishing houses. And in return, we got their content to sell to public libraries on the licensing model. So there are clearly two different business models that I'm onto. One is licensing our software, and two is getting content from multiple publishers and licensing them to public libraries. And today in the UK we are serving more than 200 libraries with our the digital content. They can it's the annual subscription model similar to what leading international companies are doing. And it's a very tough market. There are a number of international players. We are up against companies who are doing 500 million in revenue globally, and so from a content licensing side, we have bigger challenges on competitions, and on the technology sale, is most of our technologies are onto the publishers who are very slow in adopting our innovations. So we position ourselves such that we made frequent cold calling, social media reach outs. We have done quite a bit of market research. We have done a lot of video video marketing, where we kind of gone a step ahead and distributing our marketing brochures. In 2016, we have attended a number of international conferences to kind of make our presence felt. Having done, the last 12 months has been a turning point in our business with 2 publishers, another 20 publishers in our pipeline. We moved in 2014, we were doing only $50,000 revenue, and 2016 we have done 100,000. So we have got multiple packages for the libraries. They can take as low as $1,000 worth of content per annum to even $10,000 worth of content per annum. And we have also got very good, the marquee clients and prospects. We have our proposals sitting with MIT in the USA, and we've got Qatar Airways, where we are trying to sell in-flight entertainment content. So we've created a number of channels to kind of resell the content licensing platform. So that's kind of in addition to simply stopping with the public libraries who are the consumers of trade content, novels, fictions, and so on. Subvert the challenges and competition, we have found new channels such as airport lounges, in-flight entertainment systems, 5-star hotels, where when people come in, instead of doing physical content, reading papers and books and magazines, we have introduced digital content in those spaces on the content licensing front. So that kind of getting a lot of traction from the industries over the last 3 to 6 months. And we have done a significant amount of touring of all these prospects last year. So what I was planning to ask Ramana is just with founders, goodwill, and friendly angel investors, we have so far managed to raise up to £450,000, and we have done a lot of investment in developing, fine-tuning the product. It is not only generating revenue. We have built a multi-geographical pipeline that we are planning to convert a lot of them in the first 2 quarters of 2017. Early stage, I would still want to call ourselves as early stage, but we are definitely opposed to any investments. And the only way, we are a very small team. It's about 4 developers and 3 sales and marketing, and run by coordinated by myself sitting in London. So we were, unless until we put, my thought process, having worked in the industry for 3 years, is if I have a relevant sales and marketing and business development team in at least 3 to 4 geographies, US, Europe, UK, and Middle East, I think the potential to grow the business, having done the blueprint over the last 12 months, is significantly high. So that's the kind of road that I've hit. I've got a technology partner who is interested in investing in it. This is a development in the last 4 weeks, but I haven't taken a decision against should we go with a technology partner investment or other channels. That's the kind of query that I have for you, Ramana.
Jahir, I have one first question, which is, are you selling these deals to publishers and public libraries on the internet and by phone? Are you able to close these deals by phone? Or are you actually visiting these libraries and publishers?
None of the deals could be closed without visiting them, both the public libraries as well as the publishers.
See, there is a huge scalability problem. The deal size at which you're operating, $2,000, $10,000 deal sizes, you just cannot afford to scale a company by selling these deals in person. This is a price point that you have to close by phone, and if you cannot, this business is not scalable. And no investor who understands what they're doing, friends and family is a different thing, but if you're looking for smart money, no one who understands how businesses get scaled is going to invest in this company given those dynamics. So the only kind of money you can attract into this company right now is dumb money. And I don't believe in taking dumb money into companies.
Sure, sure.
So that should answer your question about whether you should take money from this, technology firm that wants to invest in your company. You need to figure out the right business model for growth, and there is a lot of figuring out to do here. You've got some understanding now. You've got a bunch of libraries to work with you and so forth, a couple of publishers, but you've got to figure out a way. If the deal size is going to be $10,000, you need to figure out a way to sell it. You have to learn how to sell this online and by phone and have to close deals without visiting these people. That is the #1 recommendation I have for you.
I think in the last 12 months, I have done a lot of research, not just research, identifying the best way of reaching out to the publishers. We have used a third party, on a contract basis we are only 4% in the country. There are 2,400 libraries in the UK, and we are only in about 160. So that's less than 10%. So the reach has we employed the third party to do a cold calling, email marketing. We have done a lot of promotional content to reach out, and we have also offered free license for 1 year in conjunction with some of our publishing customers. But the intake using those channels have been extremely low compared to what I have achieved by visiting these libraries. So,
yeah, but it's not reasonable. The price point at which you're selling you cannot build a profitable company doing this in person. So let me ask Guy for his input, and then we're going to have to move happy to work with you further to help you figure this business out. There's a lot of things to be figured out. You're doing certain things that are not the right ways to build a business. You'll never build a profitable business if you keep going that way. You'll keep needing external financing to keep going, and you'll never become a self-sustaining company at this rate. Guy, what is your thought?
Yeah, Jahir, I would agree with Shramana. There are a couple of kind of thoughts that I kind of put to you. I mean, you've got some validation certainly in the library space. I don't know whether what you are selling to these libraries, without kind of diving into it, is fairly sort of a fairly consistent, standardized offering. But the good news is that you've got some validation. I mean, a major philosophy for my business really is build once, repeat often, and that's about replicating a model that works quite well. But there again, as I said, you've got some validation. The key challenge really is how can you scale that? How can you sell that to lots and lots of libraries, whether in the UK or elsewhere around the world, without actually having to physically visit them? Now, I guess the question is, is it possible perhaps to consider perhaps corporate venturing? I don't know, without again going deeply into your technology offering. I do know that there are quite a number of the publishing houses that do have corporate venturing arms. I mean, thinking off the top of my head, companies like Thomson Reuters and Reed Elsevier being two. And the other thing is also, I mean, if libraries are kind of a natural route to market for you, whether it's possible, whether there's a common or fairly common technology platform that you could sort of integrate with that will enable you to sort of piggyback on their technology to get yourself out into specific sort of geographical markets.
Yes, I think that was a good one, Guy. What I have done is, taking on the cue that you have mentioned, I have kind of joint ventured with a company who have been serving my kind of portfolio of customers with a different set of services, and using that, prospecting line, I have built a significant pipeline in the last 3 months. This partnership happened sometime in October. Now we are going after those prospects. We've got more than 30 publishers who are interested in our technologies because we went through an existing channel.
Okay, so some sort of a channel needs to be figured out to do this selling. You cannot have feet on the street, bag-carrying salesperson on your payroll to do this selling. We need to figure out some sort of a channel to do this, right? Okay, Jahir, happy to again to work with you further. We need to move on for now, and we'll see if we have more time to talk after I've done the next segment, okay? But I think the best news, Jahir, is that you have validation that there are takers for what you have to offer. So we need to figure out the sales and marketing model of this.
Sure. Yeah. Thank you. Yeah.
Folks, we're going to tell you a little bit about how 1 million by 1 million works so that you can take advantage of it. If you like what we are doing here, please refer the program to other entrepreneurs who are looking for help. So that's, our request to you, what we, and we need serious entrepreneurs. As you can see, every single entrepreneur whom you met today are working on their ventures for upwards of a year. So Anuj has been working on his venture for a year. Ashish and Jahir have been working on their ventures for 3-4 years already. And still, there's so many things yet to be figured out. You're going to need to have the stamina and the resilience to put in the level of work necessary to build these things block by block. You have to put one foot before the other. And that's what, we have kind of built 1 million by 1 million around that philosophy. We don't believe in silver bullets. We don't believe that you can build a company overnight just like that. And there are no silver bullets. It's basically experimentations, trial and error, and figuring out what works for your particular market, following proven methodologies. That's something that we can teach you. You can learn methodology that that works, that has worked for other people. We have case studies with which we can teach you all that, but you will need you will need the mindset of A, learning rapidly, and B, working really, really hard. So if those two are, consistent with your mindset, then 1 million by 1 million can help you. If you have, desire or expectation of some silver bullet, this is not the right program for you at all. So in terms of resources, you'll find everything at 1mby1m.com. There's a free blog with tons of case studies and both video content, text content, all kinds of stuff. Go look at it. It's free. It's chock full of learning material. Then we have the Entrepreneur Journeys book series that can also be a starting point for your learning. There are a dozen books, and depending on what is it that you want to learn. For example, in Jahir's case, one of the issues we will need to work on is positioning. Right now, based on what you described, the library part was kind of clear, but what you do for the publishers was not clear to me at all, and that needs to be positioned. If you want success in high-velocity sales, your positioning needs to be laser sharp. So, in any case, so these are factors in how you build a business. And we have put out 12 volumes of Entrepreneur Journeys. They're all case study-based books, which double-click down on certain specific topics. So again, another place where you can start your learning. These free roundtables happen every week. So you can keep coming back to them. You can pitch at them. You get one chance to pitch. You can pitch. You can also learn from other people's material. You can learn from the recordings. Another body of learning material, and that is also free. Then we have the full acceleration program, which offers you extensive methodology guidance, a full curriculum that is video lectures and case study based. We help you with business development. We help you with extensive strategy consulting, project-based consulting, just like we're doing here. We have private roundtables where we do that for our premium members. And then we help you with financing, we help you with media relations and getting your word out there, getting visibility both with customers and investors. through our media platforms. All of that is part of the premium program. The one-on-one premium is a $1,000 annual membership fee. And I strongly encourage all of you to go look at the one-on-one self-assessment and ask yourselves these questions. These are the questions that smart investors will be asking you, and you should be asking yourselves, because you are the most important investor in your own business. So you need answers to these questions. And if you get stuck on the methodology side, like you're encountering a question which you don't really know how to answer, you can go to One-on-One Basic, which is our curriculum-only program, just $99 a month, and you can learn methodology on your own, using this online video lectures and case study-based curriculum. And then, that also gets you a very low-cost entry point into the learning material. So whatever works for you, One-on-One Basic, One-on-One Premium, the free roundtables, the books, the blog, whatever works for you, there's a whole lot of different learning material, learning touch points that you can use to bridge your gaps. The first-time entrepreneur journey is a tremendous learning curve. So what we're trying to do here is give you ways of bridging that learning curve and accelerate through that process. You should not make all the mistakes that are to be made out there. You will make some mistakes, it's unavoidable. But there are a lot of avoidable mistakes. If you teach yourself methodology by working with a proven methodology program, you will avoid a lot of mistakes as well, and it will accelerate your journey. So go dig around on the website. There's tons of material on what to expect from the different programs, lots of video FAQs, etc. See if this program is for you. It is a very rigorous program, and you will need to do a lot of work using the methodology and executing on the basis of the methodology, and we will give you all the support we can, but it is really up to you on how much work you put in. The more successful you'll be is by putting in more work. So that's pretty much it. Our methodology is lean, capital efficient, bootstrap startup, and the corollary of that is bootstrap first, raise money later. You have to bootstrap yourself to a point where you are fundable. And then we can introduce you to investors and you will have success. Introducing you to investors from experience we've learned without you becoming fundable is really useless. So we don't do that. That's pretty much it. Upcoming free roundtables, there are 3 more in February, and then every week in March, every week in April, we have free roundtables. So there's no gap at all. You can find lots of time to engage with us in this format. So we can go back to Q&A. Anybody who has questions can start asking questions either in public chat. You can ask me, you can ask Guy, you can call in and ask questions. Whatever suits you is fine. Vivek Raman has a comment. Romana, as you told, every company will not get funding. Here we have seen 3 presentations which you can see can get funding. Where did you see 3 presentations where we can get funding? The only kind of funding you can get without being fundable from our formula point of view is friends and family funding. That's the only kind of funding that has gone into any of these companies. No professional funding has really gone into any of these companies. So questions, folks, anybody? Friends and family, so the difference between friends and family funding and professional investor funding is the following. Friends and family invest in you. Professional investors invest in your business and the prospects of your business. So yeah, friends and family will want to support you and their emotional obligations and so forth, but it's also very dangerous. And at some point people start with a lot of goodwill, but those goodwill relationships can sour very quickly if you don't deliver on the business front. So there are a lot of relationship, landmines in taking friends and family funding. Vimal Rai, don't send me private messages, folks. Everybody should see your questions. I'll read out your question, Vimal. You're asking in the premium package, you said you can help with financing and also with media exposure. Could you elaborate, please? For example, is this in any industry, and where are the financiers from, for example? So Vimal, we only work in technology and technology-enabled services, and by that I mean information technology, not biotechnology, not clean technology. We only work in information technology, and our entire investor network, entire media network, everything is within the information technology area. So we have a sizable financial network in various parts of the world. Definitely in the US, very heavy. We have very strong networks in India. Those are areas where we have big networks. UK actually, we have good networks in as well. But you have to understand that you need to become fundable before these networks can kick in gear for you. Because if you do not have the parameters of fundability, just going and seeing investors is not going to yield. That's something that you have to understand, and we teach you everything that you need to learn about fundability in the program, and we help you become fundable if your business has those characteristics. Remember what I said earlier, not all businesses are fundable, not all businesses should be funded. Those are facts, and we just have to work within those facts. If you have a business that will grow to a nice $20 million business over a 20-year period, but doesn't have the velocity to be a venture-funded business, that business should not be funded. You should grow that business organically on a bootstrapped mode, and that's okay. That is also success. If you have a sustainable, profitable business that grows to 5 million, 10 million, 20 million over a period of time, and you make a good living, and your employees make a good living, that is also success. And as far as media is concerned, we have tremendous clout in the media. Both social media as well as all the syndicate relationships we have. Our blog post gets syndicated very widely. I'm a LinkedIn influencer. Just on LinkedIn, I have personally over 285,000 followers. Then LinkedIn, I'm a LinkedIn influencer, so LinkedIn publishes my content and distributes my content to their entire network. So just on LinkedIn alone, we have huge distribution. Then we have relationships with Huffington Post, Inc., Medium, a variety of different publishers. So we have tremendous distribution on articles we write, and we write articles about our company to give them visibility. Then we have tremendous social media power. So there's a very significant amount of media and attention that we can draw to your work and expose you to an audience within the IT space, though. This is not something that is going to work in biotech, for instance. We're not a biotech accelerator. We are an IT-enabled services accelerator. Folks, I'll introduce you to Irina Patterson. If you have further questions about the 1M1M program, you can contact her, irina@1m1m.com. And while you're thinking about your further questions, I want to thank Guy for staying, both for your story, inspiring story, as well as staying with the entrepreneurs and weighing in on their businesses and advising them. Thank you, Guy, for your time.
Yeah, it's a pleasure, Ramona, and thank you to everyone. I'm going to sign out now, but have a good day, evening.
Bye.
Yeah,
keep in touch, Guy.
All right. And you. Goodbye, Ramona.
Bye. Anybody else? We are actually 3 minutes over time, so if anybody has questions, please, go for it. And now is the time, and we're going to adjourn soon. If anyone has any quick questions, please, last chance to ask. All right, folks, we'll meet you back here next week, next Thursday morning, 8 a.m. Pacific time, and whatever is the time in your time zone. Please calculate, and let's continue the conversation. Let's continue working on your businesses, and let's continue accelerating your projects. Thank you very much for coming. I hope you enjoyed the show. Bye-bye.